Hey everybody, welcome back to the channel. I'm Satoshi Sean, glad you're here. Today we have a very special interview. I'm really excited about it. We have Micheal Rosmer from Defy Yield. He's the co-founder?
Yep.
Co-founder, and he is an international tax expert. He has a YouTube channel, The Offshore Citizen, as well as a website, The Offshore Capitalist. I'm gonna have links to all that stuff down below. I've been watching his videos for a while. They're really informative, but it's like a rabbit hole, man. Once you start going down, you can spend a day easy just watching all that. Like, I didn't know I wanted to learn about Bulgaria and what is it like to live there. But yeah, it's pretty cool. Welcome.
Thank you very much. Well, great to be here with you.
First, let's hit on what you created with Defiyield.app. Like I was telling you, I connected my wallet to it, and it's really weird how organized it made everything.
It's so nice, right?
Like you recognized my space monkey, and no one knows that space monkey. And it told me my total for my wallet, which I thought was way too high. But then I went through and added in these things that like never come up on any other app or anything. And I was like, oh wow, it picked that up. Oh, I knew about that. It had the symbols for everything. It was really, really, really cool. I liked it. Which I guess we go into that a little more. But why don't you hit on Defiyield.app, what you've created, going with it?
I think it really started. If we go back, and I don't want to take so much credit for it, we've got a great team behind it, but it really started with being yield farmers. I guess like last summer when DeFi was pumping and needing tools for managing all this stuff. I mean, just you think about, hey, listen, when I sold this, what was it worth? As you get rewards paid out, you're harvesting them and auto farm or something like that. What is that worth? Tracking your portfolio, keeping track of all your different assets, how the prices change. And I think the biggest thing that is different here, and we're putting a lot of effort into, is safety. It's so, I don't know how much your viewers are familiar, but I mean, people are getting rug pulled, there's hacks, there's all this kind of thing. And so we're putting a lot of energy into, we've got a really great auditing team. We do audits on all kinds of smart contracts. And so as we list them out, we'll know that they're audited, and we're going to have a rating next to them to show kind of what the security, what the safety level is, so people can avoid that. We have the largest bug database going open source. And so we're building artificial intelligence to basically audit smart contracts for you to find potential vulnerabilities.
I was going to ask you about that because it's machine learning AI. So can you go into that a little bit?
Exactly. Yeah. So basically what's happened is, of course, we can go through and we can manually audit, and we've put a lot of effort into creating really, really great audits, and people pay for audits, but that's kind of a conflict of interest, right? Because somebody's paying to audit their own contract. And so we've been auditing for free. We built, the largest and the first and best community in Telegram for yield farming specifically. But it's really expensive to go and do this. And there's new projects launching all the time. There's different pools, et cetera. And so as our auditors have gone through over the period of time, we've cataloged all the different typical vulnerabilities that show up. And then we're building machine learning that scans any new smart contract. And it does a few really cool things. One is, it, of course, identifies potential vulnerabilities, helps to give a safety rating of whether you should trust this, whether you shouldn't. But on top of that, it will notify you in real time if the contract changes, right? Because sometimes a lot of people don't know about how the governance works, how maybe the person who's in charge can do some off-chain governance. They can switch something and suddenly they have infinite minting that can happen. And are there time lock capabilities, et cetera. So this will warn you if something changes and maybe you should pull your funds, et cetera. So I think it's going to go a long ways. It's really, really exciting project. It's a ton of work. We've been working on it for months and months, invested a lot of money in it, but it's also super valuable to anyone. And I think that as the market matures, and right now we've had these big parabolic uptrends, but we're also in a correction right now, and that makes it more attractive for people to do things like yield farming, because you can be making money whether the market's going up or down, and some really, really crazy returns. So yeah, it's super exciting technology.
And how can it help you with the taxes?
So basically, it's really hard, obviously, to keep track of what you've actually been doing, right? I know this for myself. Like, if I'm sitting there let's look at the most basic thing that happens from a tax standpoint, right? Which is, hey, I buy something, it goes up or maybe down, hopefully up, and I sell it and I have this taxable event, right? All right, that's pretty clear. Now, especially if I'm swapping into stable coins. But what if I deposited some money? Well, first, say maybe I transferred into BNB, which has a variable price, right, on Binance Smart Chain. Then I take something and I convert to another coin. So I converted from BNB to something else. How do I know what was that worth at the time, right? Really, really tough to keep track of. Then I go and I deposit onto, let's say, Auto Farm. And on top of the yield farming rewards that I'm getting in the token pairs that I'm dealing with, I also have returns in the form of auto. And, when am I harvesting that? What was the value of it at the time that I harvested it? Is it taxable at that point in time, or is it taxable at the time when I convert it to fiat, et cetera, et cetera? This is super complicated to keep track of.
I want to ask you real quick, because we're talking about the yield farming. If I buy BNB, that's a taxable event, right?
Well, but buying BNB wouldn't be a taxable event. Okay. Selling BNB or converting BNB to some other token would be a taxable.
Now that's the thing. If I buy BNB, I transfer it to my MetaMask, and then I want to farm it. So then I put it into something for liquidity, to liquidity farm.
Exactly.
As I earn those other tokens, is that a taxable event every time I earn?
Every time you earn, that's a taxable event, yes.
And if I come out of that and then put it into a different yield farm, that's a new taxable event or no?
If you convert it, so if you put it into another liquidity pool, that in itself wouldn't be. But if you convert it to a different token, that would be a taxable event.
Okay.
So, this is like insane stuff to keep track of. I've had clients who they call me up and they're like, good luck having the IRS figure this out. Like, I can't figure it out, So you need some software that's going to help you to identify what's really going on here, where are you at, and make decisions accordingly.
Well, that's another thing I want to talk to you about is I don't like in the United States the way that the new administration is moving when it comes to taxes.
You and me too.
Never before that they're going to double the amount of IRS collection agents.
Crazy.
Double. That's a horrifying thing. This was the first year we had to actually put down. Did you interact with crypto? Did you buy, sell? So it's I think something is coming, and this is so confusing. I used to be a financial advisor. You're a tax expert, and it's like you're saying it's crazy and that's another thing. The people that are in crypto, this was designed for the average guy, for the unbanked to become banked. People that never had a bank account are coming into this, and those people have no clue of what the heck's about to hit them. Okay. So, like you mentioned, it's confusing for professionals. So, I want to try and help people to guard themselves from getting screwed over by the government, basically, when it comes to this. With that, what are some of the main misconceptions when it comes to crypto that you think people should know about?
So I think, whenever I look at these topics, I try to understand them in terms of like a mental model or a framework of how the subject broadly works. And so I think it's, first of all, important to realize that there's a difference between buying tokens and then selling them versus staking, lending, or yield farming. The first one is a capital gain. And whether it's short-term or long-term, that's a whole other conversation. But the second are basically earned income, right? It's basically like somebody is paying you on whatever basis. And we're used to getting, interest payouts from a bond, maybe once a year or a dividend quarterly or something like this. Here you can get payouts every block, right? So it increases the complexity. So just understanding that difference, I think, is really important for people to know that these are taxed differently, and therefore the strategies you would use to deal with them are different. The second thing that I think is a bit of a misconception is, so every time you trade, like a lot of people will think, hey, listen, I put my money in, and so long as I don't cash it out to fiat, hey, there's nothing. No, that's not true. They tax you in most places in the US. There's a few exceptions, like France doesn't do this, but most of the time, every time you switch from one token to another, that's a taxable event. Mm-hmm. And a lot of people are going to be really caught in there. Now, the good news on this is the other misconception that I hear from people is they say, hey, listen, I've had all these taxable events. My taxes are going to be way higher than my earnings. That's not true, because you also get to claim the losses, right? So the losses will offset. And so, it makes it a little bit easier to keep track of and a little bit less painful than it might be. But yeah, that's a really common misconception that people have. And I think it informs what they should be doing.
On lending, if you are lending, or no, if you're borrowing, if you're putting your crypto on hold as a secured loan and then take a loan, that's not a taxable event, right?
Correct. Yeah, and that's really like a great strategy in some cases, right? If you're somebody who bought Dogecoin, a year ago and it went up, 200 or 21,000% or something like that, and you're like, hey, listen, I think Elon Musk is going to keep pumping this thing. Well, you may not want to sell it, but you may want to get some cash so you can borrow against it, and you can take that in theory. And this is what actually, so it's really interesting because what crypto is doing, I think, at a big level, is turning ordinary people into a lot of what has been common amongst big players for a long time. So if you were in a tech startup, right, you're Elon Musk. Elon Musk never sells shares of Tesla or SpaceX or something. He just borrows against them. He's got $1 billion of debt or so. And it just keeps going up. The cost of borrowing is pretty low. You have kind of the same thing here, right? If you bought Bitcoin at 4,000 or 5,000 last spring, and now it's 35,000 or something today. Well, rather than selling it, you figure, hey, listen, it's going to be worth 200,000 in a while. Well, you can turn around and borrow against it, and that's not a taxable event. You can of course go and use it to buy more Bitcoin or whatever else. That's one thing people do. But even for your living expenses, even if you want to, say, go and buy a house or buy a car or something like that, that's not going to be taxable.
On that, which is something which that has been discussed and is very, very clear. That's a way to get out of a taxable event, is to do that. But on the P2P thing and becoming your own bank, if I'm loaning somebody do I then create the taxable event loaning them the crypto?
So it's not a taxable event when you loan it to them, but the interest payments that they give you are taxable events. Okay. And it's important to know that, so this is where it gets a little bit complicated, is what are you being repaid in? If you're being repaid in, stable coins or fiat or something, then that's pretty simple. But if you're being repaid in crypto, then what is the value of those tokens at the time when they're paid to you? And that's where, having a great platform like Defiyield is really useful, because it can keep track of all that stuff for you and you don't have to pay attention to it.
Okay. What else did I want to hitch on? Any kind of tips or tricks besides that?
Yeah, well, so I think that one of the things I wanted to mention was people are in a situation where they should, in a lot of cases, start to view their crypto as an investment, or as a business rather. So it used to be, you just think of it like, I'm going to buy some tokens, and it's basically like buying a stock, and it goes up and I treat it accordingly. But now that we have things like yield farming, we have staking, we have lending, all this kind of thing, because that's taxed at a higher rate, you may want to consider whether you should be operating through a company as opposed to personally. Because the personal tax rates, federally is currently 37%. They're talking about raising it. On top of that, you have the state taxes, right? You're in California, you're talking about over 50% if you're in the highest tax bracket. Okay, great. They're maybe going to raise the tax rate on capital gains. That's bad. But the federal corporate tax rate is 21%. So the effects of deferral, if you're getting taxed only at 21% and you can keep compounding that more and more over time, can add up to a lot. The other thing that people obviously contact me, or maybe not so obviously, but because I do international tax a lot about, is, do they want to relocate to Puerto Rico? Do they want to relocate somewhere else, et cetera? And so for either Americans who are living abroad, or Americans who are interested in moving or willing to move, or people who are not Americans and they want to do something, there's a lot of different strategies you can use to, in some cases, get your taxes as low as 0 to 4%, which is, that's a lot of extra money when you're talking about kind of the big bull run that we've been seeing here.
Yeah, and I really want to talk to you about Puerto Rico and other places, because, I've heard a lot of the things and I just kind of take them as gospel. And then I watched one of your videos and it's not gospel. All of a sudden I feel like I was listening to old wives' tales, But I want to about losses. You mentioned rug pulls. Is a rug pull, could that be filed as a loss?
Yeah, yeah. So rug pulls, hacks. I know somebody who had a phishing scam on his MetaMask and lost $1 million. All of these things, you want to kind of get some documentation to validate it, but in theory, all of that could qualify as a loss. Now,
Okay.
whether it's a capital loss or an income loss is a whole other conversation. That gets a little bit more complicated, but yes, you could potentially write that off.
Okay. Yeah, I had a hack with crypto.com
Yeah.
for a chunk. And yeah, so that's all documented. But on a lot of stuff, it would be tough to document. Speaking of tough to document, what if you actually lost crypto? Like you had a cold storage wallet and lost it.
Yeah, yeah, absolutely. You know, you're out on the yacht and it just falls into the Caribbean or something.
And see that now you're going down the road. That's where people say it's always a boating accident. I had a boating accident, lost my hardware wallet or my guns, whatever
Terrible.
it is. Yeah. But
Yeah,
what
so
about that?
so theoretically you could try and claim that, and in theory it would be legitimate. The challenge with it, of course, and obviously that opens up, lots of people's opportunities to try and scam the system. The thing that's increasingly going to be an issue, and I think this is something that people aren't really prepared for, because look, like historically, crypto, you could basically be doing stuff in crypto and nobody would know about it, right? But moving in here, I mean, they're applying machine learning algorithms to the blockchain. Everything's transparent on most of these. And so if you say, hey, listen, my cold storage wallet fell into the ocean, and all of a sudden they are like, okay, great, give us the wallet addresses, and they're starting to get you to report the wallet addresses, and they start seeing tokens move. Ooh, that's not gonna reflect well on you. So
Yeah, I was thinking the proof you'd have to like give your uh, exchange wallet addresses where you moved it into it. Then that opens up the whole libertarian and information and
oh yeah, yeah.
chain analysis, and they could find out more stuff. But yeah, I guess okay. Um, let's hit NFTs real quick, which to me I think is going to be just a mess. But as far as taxes go, how does that even work?
Well, I mean, it really depends on what's going on. So again, it's pretty simple if you just bought an NFT in some auction and it went up and you sold it. Okay, great. You can have it's a short or long-term capital gain. It's like buying art, right? So
Is buying the NFT a taxable event, or is only selling it?
only selling it. Anytime you buy something that's not, however, if you, let's say, had Ethereum, right, and then you turned around and used Ethereum to buy it, there would be a taxable event in the conversion of your Ethereum to whatever else. Does that make sense?
Like wrapped ETH or something like that.
Yeah, exactly. Exactly. You're like, okay, great. I've got my wrapped ETH. I go and I buy, whatever, some painting. And let's say the ETH, I had bought it at $1,000 and it goes up to $2,000, and then I convert it. Well, that conversion is a taxable event.
Okay.
So then I go and I say, all right, perfect. I've got the NFT. If the NFT goes up, that's fine. Now, I think where it gets to be a lot more interesting is when we start talking about people who are making their own NFTs, which we're going to see just tons of business.
That's what I was going to ask you about next. Would making an NFT and selling it, is that income, or is that
income.
Okay?
Yeah. Yeah. Now, however, this gets really interesting because there can be some nuances of this. So like one of the really cool things, of course, on NFTs is you could program it that every time it gets transferred from one person to another, you basically get a royalty.
You're answering my questions before I ask them. Yes. Talk about that. Is that like a dividend, or that would be capital gains?
So that would probably be considered a royalty. And royalties can sometimes have special tax rules associated with them. There's going to be a bunch of really complicated, weird stuff that's going to take place over the next little while because, for example, when you deal with international tax, again, kind of the area that I spend a lot of time on, it really matters what country income is coming from. And so the question is, if I'm in Bulgaria, where I am today, and I deposit onto Celsius is a US company, and I'm getting paid interest, is that subject to US withholding tax, or is that somebody else's tax? And at this point in time, I haven't seen that companies like Celsius and BlockFi and Nexo and these guys are taking that into account. But I imagine that over time, that will become an issue. And the same thing is going to be true for these royalties. It's like, okay, great, I have this NFT, I'm getting this royalty. that could be really good because in certain parts of the world, you can sometimes get no tax on royalties. So that could be really favorable for you. It just kind of depends on the situation.
What are some of the best tips or best ways you can get for just regular people, simple kind of ways that they can pay less or make their tax burden as small as it can be?
So if you're just a normal person, I think the most basic thing to do, there's kind of 3 ways to save on tax. Okay, so the first one we can pay attention to is, okay, we want to lower our tax rate. Usually the only way you can lower your tax rate is to move somewhere else. Right? That's pretty much what your options are. For Americans, that means you're going to either move to Puerto Rico or you're going to renounce and move somewhere else or something like that. For people in other parts of the world, it's a little bit easier. They don't have to renounce. They have a few more options available to them. The second way is you can get write-offs. And so this is where, having a tool like Defy is going to help you a lot. It's, not even our core functionality, but being able to keep track of that and make sure you're not paying tax on extra gains is going to be important. But the third thing is deferral. And so everybody's familiar with, Roth IRAs and 401ks. That's a deferral effect. And one of the things I don't think people appreciate is how big a difference deferral makes. So I'll give you a really quick example. If you have $1 and you double $1 every period for 20 periods, it could be 20 years, 20 months, whatever. At the end, you'll have just over $1 million, about $1,048,000. So if instead you doubled that dollar, except each time you got taxed at 33%, so 1 becomes 2, but you get taxed on the gain 33%, becomes 1.67. I don't know if you've heard this before. But
I'm a financial advisor. Was a financial advisor. You're talking about like annuities versus mutual funds and IRAs, but yeah.
So yeah, exactly. Like people will guess, and they're like, okay, like maybe it'll be 600 by the end of the period. If it was $1 million, it'll be 670. It's like no, it's $28,000. Like it cost you $1 million because of the effects of this, and so because of that, any ways that you can defer are important. That's one of the reasons I mentioned earlier about possibly having a company is if you're in the situation where you have a company, first of all, you can write off different things, but also you can defer at a lower tax rate, and that could potentially save you quite a lot. The other thing is, of course, sometimes you have self-directed IRAs and stuff now that you can have a little bit more flexibility in. So there's, depending on person's strategy is, are they making money off just buying and holding? Are they making money off of, yield farming, staking, et cetera? A little bit different than, it's kind of case by case in that regard. But the most basic thing I would say is use deferral mechanisms, either something like a self-directed IRA or put it into a company and be able to benefit, assuming you have a long-term time horizon on what it is that you're doing.
We're also talking about, we're talking about a sector which currency, it hasn't even been declared money yet, really.
Yeah.
It's below the ground floor. So the regulatory framework hasn't even been built yet.
Yes.
We're talking about nuances and little things that'll have to be built onto that framework, which hasn't been built yet.
Yeah.
In your opinion,
Yeah.
how do you think it's going to be when this is done? Let's say 2 years from now, when we have a working regulatory framework and we're looking at, what could qualify as an IRA, what couldn't qualify as an IRA, so on and so forth. Because an IRA is really just like a piece of tape with the words IRA on it, and you stick it on different investment. So, I mean, what do you think is going to happen to people who've been in crypto for, say, 5 years, 6 years? What's going to happen to all that? Is it just going to be forgiven? Is it going to be like, hey, it's a weird thing, we're just starting out? Or we're going to...
That's the IRS we're talking about. These guys are crazy. No, they're not going to forgive something. They're going to get better and better at digging back into it. And so I think, hopefully, right now a person can have been in it for long enough that it was hard to track what was going on. But the people who have been in it for a long time, the OGs who have a lot of money there, are going to be in a situation where they're going to kind of have to figure out some strategies of how to kind of like legitimize all their old gains without making it seem really like, show that, hey, listen, I did all this stuff investing in ICOs in 2017 and, was involved in the initial coin launch of Ethereum or whatever, right? All this crazy stuff. And they're going to have to figure out how to kind of shift that over and legitimize it. And that'll be a bit of a hassle. At least they'll have a lot of money.
How do you get around, like, well, I used a VPN to invest in this ICO that was not supposed to take in, U.S. residents. And I mean, there's so much that people have done just because it wasn't, it wasn't illegal because there wasn't a law, but there's going to be a law. So that's what I want to get your feeling on what's coming when they finally jump into this. With them jumping into it, there's been a lot of weird things and things that I can't get my head around. So Janet Yellen came out and someone else, and they said that they're looking at making, anytime there's a transfer of crypto for over $10,000, it has to be reported to the IRS, which that's how it is for money. If you transfer $10,000, deposit $10,000, it's like this magic number. But in crypto, I kind of thought that might already be a thing, but then I was thinking in terms of exchanges or other stuff like that. But in what we've been pushing is be your own bank, be your own bank. Like I was telling you, now we as people are subject to banking rules. So the craziest thing, I can understand if I pay you $10,000, I send you $10,000. Which one of us needs to report that? Who's the bank? Is it you? Am I the bank? Are you the bank? But the crazy thing is, if I send $10,000 from my wallet to an exchange, that's me sending it to myself. Who do I report that, and why would I report that? So it's very weird. What do you think is going to happen on that? Who do you think the bank is?
So, there's a few things to note, which is actually it's more aggressive than it looks on paper if you compare it to the FinCEN rules. FinCEN rules are the rules for the banks that require that if any transaction over $10,000, along with other things, they have what are called suspicious activity reports that they file, needs to get reported. But actually, that wasn't reported to the IRS per se, right? So it was like reported for money laundering purposes and this. Now they're basically saying, hey, listen, we want that information to go to the IRS. And what they're saying is, fortunately, so far, it's only businesses who have to report, not individuals. So that's going to be a little bit interesting, where it's like, okay, if you're your own bank and you're using just a cold storage wallet, your MetaMask, whatever, you're not transferring via a business. Okay, technically, so far, based on what they're saying, that's not a reportable transaction. Now, I would suspect that over time, they're going to make you report all of those on your side. Or hopefully, there's some tools that make it a little bit easier. But yeah, I think that they are going to get more and more aggressive in trying to regulate crypto. I think I kind of said this back when PayPal started accepting it, was people viewed this as a good event. And to me, it was a really bad event because PayPal is a walled garden, right? And I think that what the governments want to do is they want to basically try and bring all of this stuff into the walled garden. They basically want crypto to become like what's inside your brokerage account. They're fine with you owning it and just treating it like a stock and it goes up and down and whatever. But being able to actually transact in it, that's a threat to them. And they don't want that. So they just want to say, okay, great, put it inside this custodied platform. We have somebody that we can regulate, we can go after, we can find them, we can do whatever, we can make sure everything's okay, and kind of kick individuals out from doing it themselves. And this is one of the reasons I encourage people. I'm like, please do not use PayPal to buy crypto. Like, go and do it so that you own your own keys, you own your own wallet, it's yours. Because I think basically the US has weaponized the financial system, and it's not a good thing in the big picture at all. And basically they're abusing their power. If you just think about this, right? Like, there is no court that you can go to complain if a bank shuts your account down. But today, it should basically be a right that you have the ability to send and receive and store money. But we're in a world increasingly where you can't do that in cash anymore. So how are you going to do it? Well, you do it through a bank or you do it through crypto. And your ability to exist as a person and make a living and all that kind of stuff is dependent on this financial infrastructure. And without any accountability, without any court oversight, without any checks and balances, they can just shut you down. They can freeze you. That's a terrible thing. We don't want that.
No, and it is it's mind-boggling. I have friends who have a big YouTube channel.
Yep.
and they were telling me that the bank went and shut all their accounts down, all their accounts,
Yep,
and they and
totally.
they said why, and they're
Yep.
like, well, they said, we don't understand, and literally because one of the guys got into a fight with the new president of the
Yeah.
bank like 5 years before. So this guy becomes the president of the
Wow.
bank, and the first things he does is shut their accounts down. That's
Yeah.
so ridiculous. And they don't say that. They're like, well, we're taking a look at it. We should, we'll have it fixed maybe next week. But nothing
Yeah.
happened. Is it because we deal in cryptos? No, it's not that. And then he
Yeah.
found out that, oh man, Billy Bob became the president of the bank 2 weeks ago. That's it. It's just it's crazy.
No, it's not good. And this is like decentralized finance is so exciting because it's like the one reasonable solution to kind of like fight back against that.
Yeah.
And of course they're not going to like it. They're going to come down on it
No,
hard and
and I
try
have
and
a lot of friends.
regulate node operators. Whatever.
I have a lot of friends that think, oh, banks are on board, man. They're like, banks aren't your friends, dude. They're not. I said, this is the biggest threat to the whole system, man. They're not. Payment processors, I can see, because they pay the banks. They're going to save money with crypto. But as far as the banking system goes, they're not your friend. They really aren't. Now you mentioned moving to lower your tax rates. I had heard
Absolutely.
Portugal, no taxes.
Yep.
Free crypto, go there, you don't pay nothing. I watched your video and you're like, well. And then Puerto Rico, I've heard that it is also no taxes for crypto. Can you kind of go over those two?
Sure. Yeah. So I think the first, just really important distinction to make is somebody an American or not? And I've had more people contacting me to renounce their U.S. citizenship in the last year by far than I've ever seen. Lawyers who we work with, et cetera. Yeah. Yeah. Since the election, like the numbers are exploding. And it makes sense, right? Because basically, as a U.S. citizen, you're taxed on your worldwide income no matter where you live. The exception to that, the magical loophole, is Puerto Rico. Puerto Rico, you can go and you can live there. You can qualify under something called Act 60, and there's some complications around what you have to do in order to do that. But so long as you're willing to do the things, it's pretty straightforward. You have to live there for at least half a year at a time. But under that, you can get zero tax on capital gains and on dividends. So what does this mean? Well, basically, when you're buying and selling crypto, you can pay zero tax on that, which is amazing. If you're doing something more sophisticated that might be considered a business, you can put it into a business. The business can pay 4% and you can get dividends tax-free. So this is like the best thing for an American who wants to stay an American, who's making a decent amount of money. Now, if you are saying, okay, I'm not making a huge amount of money, maybe you're making, there's something called the foreign earned income exclusion for Americans, where if you go and you live outside of the US for over a period of time, you can get earned income up to a certain value. It's about $110,000 a person per year tax-free. And so that means that there's some ways to structure it. If you were making, let's say it was you and your spouse, and so you're each going to draw this, you can be at like 220 grand a year. That's not bad, right? For zero tax, if you're willing to go and live outside of the US. So let's talk about Portugal. Portugal could be a place that you could go if you were willing to renounce. Now, to renounce, you would need to go and get a second citizenship. So there's citizenship by investment programs. You can basically just buy a second citizenship, which kind of gives you that flexibility. Otherwise, it takes typically 5+ years, unless you already have another one, which is a whole other conversation. So Portugal has this rule where they actually do treat cryptocurrency as money right now. And they don't count fluctuations in currency as taxable gains. So they use the euro there. Let's say somebody has a British pound bank account or a US dollar bank account, and the prices of US dollars to euros changes. They don't tax you on that. And they treat crypto the same way. They say basically, hey, well, that currency changed price, we're not taxing you on it. This is great. It doesn't apply for if you're yield farming, staking, lending, or arguably if you're like an active day trader. So if you're in those situations, you have to do some more planning around it. There is, a bunch of things you can do with corporate structures and trusts and whatever else. So that's stuff that we help people with all the time. But those things, otherwise, if you're just kind of a normal person, and you're able to go relocate to Portugal, Portugal's a great place right now, provided that, again, you're not a US citizen, or you're willing to put some sort of a structure in place to kind of find a match. So that gets a little bit more complicated. For US citizens, Puerto Rico is the place. And there's lots of places aside from Portugal, by the way, if you're kind of going to go down that road.
Well, me and my buddy, the ones in Finland, we're looking at, like retiring to. I was looking at Belize, but he's like, "No, Portugal, man.
Yep.
Portugal, we got to pay nothing." I was like, "Belize is nice, though, man. It's really cheap." Speaking of the yield farming, we didn't hit on this, but I have a lot of masternodes. Now, they pay, like you said, blocks. I get 3 in a day, 4 in a day, 1 every week, whatever. But those would be considered?
Those would be considered income, typically. Yeah.
Income, okay.
Yeah.
Because we hadn't hit on masternodes and how that works.
Yeah. I mean, that's a great income strategy. But yeah, you kind of want to treat it as a business when you're going to go down that road.
Okay. And then if I did have a business incorporated or whatever, I could put the masternodes through that, and that would be tax-free if I was in certain jurisdictions, like Portugal.
Yeah, that starts to get into like fairly complicated stuff. But like I said, at a basic level, okay, you could pay a corporate tax rate. If you wanted to set up a foreign company, you could maybe pay a much lower tax rate. Again, depending on where you live, you might get to maybe you could get to a 0 tax rate at a corporate level. It's a little bit tougher.
Puerto Rico mining or masternodes, would that, if that was a corporation or business that was running those?
Yeah, you could then get like 4% tax if you kind of qualify under the Act 60 rules. That's the corporate rate in Puerto Rico.
And that's 4% paid to?
What do you mean paid to the IRS?
US IRS, or is that a state tax?
Yeah. So the IRS is still the ones you deal with.
Okay.
But of course, there's like a special part of the Internal Revenue Code that deals specifically with Puerto Rico and gives them kind of their own ability to decide taxes, and super unique. So I don't think AOC is going to like it. A certain group is probably going to want to try and switch Puerto Rico over and get rid of that. But for now, it's an amazing tax loophole.
What advice do you have? I wanted to kind of hit this. So many people, in crypto generally, like I said, there are people that have really never had investment income before on a level where they're going to have to worry about taxes, or they're going to have to get a 1099. And there is no 1099 with crypto. So let's say you're, this 25-year-old, 22-year-old kid that, put $2,000 into Doge, and you made, $12,000. What do you do? What are all these people that this is the first time with the whole GameStop stock and or GameStop stock and all that they've made like a ridiculous amount of money. This year is the first year they've had any kind of investment income. What kind of advice can you give to them?
Well, I mean, that's a case where probably you want to make sure you have a good accountant. So I think about it 2 ways. I think about it short term and long term, right? So the short term is, okay, make sure that you're compliant and you follow the rules and optimize as much as possible. And to do that realistically, you're going to need probably to have an accountant and or at least have some good tools. So there is actually Token Tax is a service. So basically, you can get all your information on a platform like Defy and then tie it into Token Tax, and that can help you out quite a bit. So at least on the crypto side, not so useful if you're talking about GameStop or something. That's good. But then I think you need to be thinking long term and think, is this going to be an every year thing for you? Is this just a one bull market thing? Is this, waiting until the next cycle thing? And to me, I mean, my position is that this is an enormous opportunity. And this is not a this year opportunity. This is like, this is the internet in 1997 kind of opportunity. And as a result, if you want to jump in and turn that into something big over time, well, then you should probably think long term about getting yourself ahead of the game. I have lots of people who contact me now who it's like, okay, they've just made, $12 million or a couple $1 million or whatever. And really, they should have probably planned for that a year ago, because now they're in a situation where they're going, what can I do to try and catch up? And there might be some things that you can do this year, but if you're willing to think ahead, then 4 years from now, you could be in a really good situation. And so that's something that I don't think should be underestimated.
All right. Well, that's about it, man. I don't have anything else. Anything else you want to go over or talk about?
I think that those are, really good start for people. It's something that if you're interested in it, obviously you can start diving down the rabbit hole like you were mentioning. You can get a lot of information. I would say that just kind of the last point is be really careful, because there's a bunch of people out there who know enough to be dangerous, and not quite, they can't go that step further. And so, be sure that you're kind of, when it comes to this stuff, it pays to be a little bit extra cautious, because it could end up coming back to bite you if you just kind of assume that it's a way that it turns out it's not quite that way.
Definitely, like we're saying, it's confusing stuff for professionals, so it's horrifying for most folks. But
Exactly.
check out Micheal over on his channel. Check out Defiyield.app and the Offshore Citizen. It is like I said, cool channel. I'll have links to everything in the description. Thanks for hanging out, Micheal. You take care.
Right. Yeah, absolutely. It was great chatting with you.
Crush the like button. Remember to put a comment so you're registered to win crypto this week. You guys take care. I'll see you in the next video.
See you guys soon.